Our next guest says fear is the #1 factor driving currency trade. Rebecca Patterson is with us now. She is the global foreign exchange head at JPMorgan Private Bank. Rebecca, always glad to have you in with us.
Thanks.
When we're talking about euro-dollar, I mean, we've had some pretty big voices on the show. Gary Schilling months ago, Erik, do you remember, calling for parity before anybody else was talking about it. But then Jim O'Neill saying, look, the level of support is probably around a 120. There's so many euro bears out there. It's a contrarian trade right now. Where do you fall?
Well, we just revised down our year-end euro-dollar target this week to 118, and we think there's a small but not zero probability that it overshoots that to the downside. In a worst-case scenario, we're looking for something around 110, maybe a little below.
And what would it take for you to move your figures down? I mean, does Greece have to leave the euro? Does Germany have to leave the euro? What's the worst-case scenario?
I hope none of those scenarios play out, frankly. We're all going to be really tired if they do. But to get the euro that much lower, because I agree with Jim O'Neill on his point that there's a lot of people with a position on. To get there, we would need some other shock, and that might be within the euro area. Greece announcing a preemptive debt restructuring and contagion to Spain and Portugal, or some external shock that just causes so much risk aversion that markets all go back to T-bills, flight to quality back into U.S. dollars. That pulls the euro down. It pulls everything down
but
against the dollar.
Basically, if nothing else happens, you say 120 should be the bottom.
120, 118, yeah.
Rebecca, how important is what we're seeing this morning? All of a sudden, a turn in the Aussie dollar after that almost unprecedented slide. I can't remember seeing a currency fall that far, that fast. Some people do say that that is the one that you want to watch because that's where people have been funding trades in the risky assets, using the euro to fund the trades and then go into things like Aussie stocks. Is that really the sign of stability that we should be looking for, either the Aussie dollar or Aussie yen or maybe even euro yen this morning?
I think any of the crosses in currencies funded by the yen would be useful to watch right now. And yesterday afternoon, we started to get into silly land. You know, when you start seeing the market price probabilities that Australia could cut rates, this is a country that's been raising rates since October, 6 hikes, still hawkish at its May meeting, and now the market's thinking in a dime, we're going to cut. So the markets have gotten a little ahead of their skis, I think, and so there are some opportunities to buy these, what I'd call, frankly, silly levels.
What's fair value then for Aussie dollar?
Well, Australian dollar is still expensive. We think fair value is somewhere between 60 and 70. But in a world where people are looking for carry trades, in a world where global demand is still supporting commodity prices, in a world where a tremendous amount of bad news is discounted, I think that even if it's a little expensive, the commodity revenues, the very attractive yields should help this currency bounce a little bit.
Where else should investors be looking for value right now? Which crosses are the best looks?
Well, I would definitely be looking at the Mexican peso yesterday around 12.90. If the U.S. economy is continuing to recover, and the data, knock on wood, says it is, then countries with 85% of their exports going to the U.S. obviously are going to benefit. And here's another currency with a 4.5% yield.
I know. So let's say we're looking forward a few more days, maybe not as far as the end of the year for the euro. What's going to be the proverbial canary in the coal mine? We talked about one for the mining industry just a few moments ago, but in the currency market, is it the Aussie dollar? If we see it resume its decline, that perhaps is a sign that de-risking continues and that we're going to see more massive volatility.
To me, it's not watching a specific currency as much as the politicians right now. Honestly, I know they're trying to help.
We have G20 this weekend.
Yes, and that's going to be big. It's going to be another weekend. We're all going to be watching our TVs and our Bloombergs and our Blackberries to see what they say. Right now, all the different messages we're getting on both sides of the Atlantic are creating this uncertainty, which is frankly doing more harm than good. So if they can get their messaging more unified, EMU, union, we need unified comments from these people. If they can get that together, then I think the markets can stabilize.
Rebecca, thank you. Rebecca Patterson, Global Head of Foreign Exchange at JPMorgan Private Bank.